Successful Minds with Patricia Barnowski-Schneider, the show that takes you around the world to share interviews with some of the most successful and relevant people on the planet. Hear their stories and get the most important business lessons they have learned on their road to success and get exclusive advice on how to implement their success into your life and business. Successful Minds with Patricia Barnowski-Schneider is brought to you by the Strategic Advisor Board and your host, Patricia Barnowski-Schneider.
Hello and welcome back to Successful Minds. I'm your host, Patty Baranowski-Schneider. Today I'm joined by Jeffrey Weber, who is a distinguished financial advisor, newsletter author, and the maestro of AIM investing. So welcome, Jeffrey. Tell us a little bit about yourself.
Hi, I'm Jeff Weber. I was born in New York City.
Native New York, I
went to college in Arizona because I love cactus. Been interested in investing since I was a kid, and I talked my dad when I was 8 years old into buying me 5 shares of Erie Lackawanna stock because I love railroads. And literally in 6 months, the Penn Central Railroad bought the Erie Lackawanna, and the stock I had bought at $2.62 a share was sold for $16 a share. Nice. So I learned early on at the tender age of 8 that there was money to be made investing. So it got me very interested in investing, and I've been doing it ever since.
Very nice.
Basically, when I went to college in Arizona, I haunted used bookstores. I found the book that changed my life, which was Robert Lucillo's How to Make $1 Million in the Stock Market Automatically. He had developed a superior contrary investing method, which means you were always buying low and selling high. And that became my Bible, and I studied it and read it several times and learned about it. And based on that, I started my investing and helping my friends and stuff. And I made the major contribution that AIM is a very good system, but it needs volatility. It needs a lot of buying and selling to make the highest profits. And I went to a free financial seminar at one point, and I learned about long-term options or leaps, and I found they work perfectly for AIM. To give you an idea, one of the big stocks in the news lately has been NVIDIA. Well, in one day, at one point, NVIDIA went down 27% in one day. So obviously, with my AIM investing method, that was a buy low moment. And then literally like the next day, it goes up 15, 20%. So with leaps, the reason they work the best is leverage and volatility. What does that mean? That means if you wanted to buy 100 shares of a stock, it might cost you $10,000. And it's, not much volatility. To buy one contract of 100 options or control 100 options would only cost you about $2,500. And it's going to go up 5 or 6 times as much as the stock. So on any given day, if you see the stock go up 2%, you'll see the option go up 10%. And that's what we want. We want action. But the options are extremely safe because they're long-term. All a leap means is that the option has more than 1 year before it expires, and it expires the third Friday in January. So right now I'm trading January 16th, 2026 options. And the new ones come out in the middle of September every year. So when I'm doing regular AIM, like Lucillo taught, I use the opportunity to roll them over to next year's, usually a month or so later. So if they come out the middle of September, I roll them over about around the beginning of November. So that way you can own the same leap forever. And to give you an idea why that's a great idea, I have a newsletter I've been publishing for over 30 years, and Apple alone started in 2006 with $74,000. Just checking the price arbitrarily once a month for the last 18 years, Apple leaps after rolling over every year have grown from 74,000 to 16 million. So it's staggering, because the beauty of AIM is that you're constantly compounding previous profits. Like I had one example in 2020 where I had a guy start with 550,000, and he didn't know anything about AIM, didn't know anything about leaps or options. I taught him well enough for the first 6 months that he did it on his own for the last 6 months, and his 550,000 grew to 1,750,000 in 1 year. So he made a $1.25 million gain. I had another guy just with Apple alone, I can remember. His Apple in January 2020 was 111,000, counting his cash and leaps. In 8 months, it grew to 386,000. So the results can be spectacular when you have a raging bull market, and a raging bull market happens about half the time in the stock market. Maybe 35% of the time you have a bear market, and 25% of the time you have kind of a sideways market. So why don't I'll get back to some of your questions. I don't want to just.
Well, I'm going to ask them to you.
Okay, you ask them and I'll answer them. I tend to monopolize.
It's all right. But I guess tell us a little bit about how your background as an auditor for the U.S. Army informed your approach to investing.
It actually helped me greatly, because I learned AIM, as I call it, BC, before computers. Because I started really seriously looking at AIM in the late 1970s and early 1980s. And being an auditor with the Army, I had access to 16-column accounting paper. So I learned AIM the old-fashioned way. I had saved all my issues of Barron's. I looked up 3 years of prices on 60 different stocks, wrote them on the 16-column accounting paper, and did the math to see, because when I read Lucillo's book, he didn't have any real stock examples. So I thought I'd like to see how it works with real stocks, to see if it, he had weird examples. I'll say that. And that I found that worked very well. And the crowning point that convinced me AIM worked was, I'll never forget, and it was 40 years ago, one of the 60 stocks I looked up was called Campbell Resources. Campbell Resource, I don't even know if it's in existence anymore. It started at $6.40.
Right.
3 years later, the stock was down to $2.80.
Wow.
Which was a 62% loss from the original purchase price. Yet when you looked at AIM after 3 years, you had a 38% profit.
Well, I guess just to clear so people understand, AIM is the alternative investment market. Yeah.
Yeah. Well, his definition is automatic investment management.
Whatever works.
The key to remember about AIM is that it totally eliminates emotion from investing and totally replaces it with logic. It's the only way of investing I know that every single time tells you exactly when to buy or sell.
Yeah, that was one of the questions I was going to ask you is, what's the core principles of investing strategy, how to remove emotion from the equation. And that's it. Yeah.
Emotion is the biggest killer of all investors. So,
for sure.
So this replaces it. In other words, this is the Mr. Spock of investing method, is the way, not the Bones McCoy method of investing, the highly emotional one.
It's so hard to take emotion out, because I remember decades ago
and I'll give you a quick example of why, emotion kills you. I had a guy who has a PhD in psychology, and his name is Jay. So I used to call him Dr. J, Well, he was the most neurotic investor I ever met in my life. He would live and die every day if the stock market went down. Well, finally, one day, the Dow Jones went down 1,000 points. He totally panicked without calling me or talking to me. And I had already made him over $500,000 in profits, which he conveniently forgot about. And he sold everything. Well, at the time, he was helping his girlfriend invest too. Well, she owned Facebook back then. her Facebook had gone from $20 an option to $2 an option.
Mm-hmm.
They do that sometimes.
Yeah.
But I have a bear buy strategy, so you never run out of cash. So he wound up selling. She had paid $58,000 originally for the Facebook. He got back $18,000 after his panic sell. So he lost her $40,000 just on Facebook. Well, I save all the old spreadsheets. I happened to accidentally stumble upon it like a year later. And I said, I wonder what's going on with Facebook after a year. It was still open. It had not expired. Her Facebook had gone from $2 an option to $72 an option a year later, to give you an idea. If he had just done nothing, ignored it, her Facebook would have grown from 18,000 to 386,000. So that's living proof that emotion will kill you when it comes to investing, you know.
I know it. Decades ago, I was doing, learning the trading. And I remember doing paper trades. When it's paper trades, I was a billionaire. I was like, this is so awesome. Yeah. But when it became my money, I was doing the total opposite, buy low, sell high. It's like I had money, the stock tanks. I'm like, oh my God, that's my money. I pull it out. The stock's going back up. I get back in. It's doing the total opposite.
Yeah.
And it's hard to take the emotion out.
Yeah. But if you can, you have a great, I have help people make more than $10 million sitting in my sunroom with no shoes and no shirt.
You have to get
because it's hot out here. It's like a greenhouse some days. When you have 30 straight days of 100-degree weather, it gets a little hot in the old sunroom. Because I live in San Antonio.
Yeah. I guess tell us a little bit, what's your opinion? What are the most common misconceptions about investing in options?
The most common misconception is that it's extremely risky and all options expire worthless. Well, a lot of options do expire, worthless, but that's because they were sold by covered call people and they're weekly or monthly options, not long-term options like I'm teaching. Right. Plus, the reason, they've had a bad reputation forever. They have very few financial advisors will even recommend you buy them. In fact, Edward Jones, stockbroker, won't even sell options, won't even sell covered calls, which make, whereas to me, an Apple option is exactly as safe as Apple stock. It's just much more volatile and much better leverage. Mm-hmm. So that's why, Apple stock might have gone up from 74,000 to say 1 million in 18 years, but the leap went up from 74,000 to 16 million. Mm-hmm. And it was just as risky. Because the other fallacy is that, options expire. Well, I'm buying long-term options. The ones I'm buying don't expire till January 16th, 2026, like a year and 10 months or so. Mm-hmm. And what I do every year with the regular ones is the new ones come out every year in September. So come October, November, when they still have more than a year before they expire, I'm going to sell the 26 options and roll them over to the 27 options. And I adjust the strike price up or down. Mm-hmm. Plus, there's even a way on Yahoo Finance. If you go to the first column of the option chain, you see this weird looking number that starts with the symbol for the stock. So if you looked up the Apple option chain, you would see AAPL 260116 starting the number. It's just an individual identifier for the option at the 150 strike price, we'll say. Well, you can click on that and you can see a little chart and it will show you exactly how that option has gone since you originally bought it. And to give you an idea, the hot stock right now is NVIDIA. Okay, I looked at 5 months of NVIDIA on that Leaps license plate for it. Mm-hmm. It started off at $34 an option maybe 4 months ago. Right now, it's $262 an option. You can easily see by looking at the Leaps license plates that just about 100% of all options, regardless of what the overall stock market is doing, have gone up or down enough to trigger a very nice sell within the first 4 or 5 months.
Mhm.
So the secret with AIM, I'll just quickly tell you how AIM would work. You would say you're going to start with 20,000. You would buy 10,000 worth of long-term options and put 10,000 into cash. The cash is there to buy when the price drops. Okay. So you buy, I don't know, 20 contracts at $10, we'll say, for example. Well, if you buy it at $10, I have found from 18 years experience, you place the next buy at 25% lower. So you're going to say, I'm going to make a buy if this option drops from $10 to $7.50, and you buy roughly 25% of what you own. So you're going to probably buy 3 or 4 contracts. And then I do it a little differently on the sell side. From experience, I've found the best price higher on a sell is about 35% higher. So if you buy it at $10, you're going to put in a sell for $13.50. You write those at the bottom of your spreadsheet. Then you place limit orders. All a limit order means is it stays in place until it either hits your price or a better price. So for example, if I put it in at $7.50 to buy, the worst price I will get on a buy is $7.50, but I might get $7.25 or $7 if the stock is having a bad day. So the leap is having a bad day. Same with the sell. So the sell, if I bought originally at 10, the sell is going to be $13.50. Again, I won't sell it at a price lower than $13.50, but I might sell it at a price higher than $13.50, maybe $13.75, $14 if I get lucky. Mm-hmm. And then I wait. And then all you have to do is check the price at the end of the trading day once a day. And then if you have a buy or sell and you're doing it yourself, you update your spreadsheets with the information, or if I'm helping you, tell me, hey, I had a sell for, 4 contracts at $13.50. Then I update your spreadsheet, send it to you that evening. You put in the new limit buy and sell, and you're ready to go the next day. And that'll take you 5 minutes. Mm-hmm. So the beauty of AIM is not only is it highly profitable, it takes very little time to do. That's the beauty of it. And all you need to know is arithmetic. Nothing fancy. If you can add, subtract, multiply, and divide, you can do AIM.
Nice. Now tell us, how has writing and giving away your first book for free contributed to your investment policy?
Yes, my first book I've written on and off for over 20 years, has a lot of great information. It's 350 pages long, but about 100 pages are spreadsheets. So I just put them in there to prove what I was saying was true, but you don't have to read them unless you're a spreadsheet fanatic or something, which most people aren't. Right. I am. Part of that Asperger's I have. So I love numbers. I've always been fascinated by numbers. So probably why I'm good at investing here.
Yeah, for sure. Nice. Now, what inspired you to start publishing your monthly newsletter, and how has it evolved over the past 30 years?
I wanted to give people a monthly guide to good stocks with good options. I wanted to prove to them that AIM works. So the highlight of my newsletter is a bunch of articles. And of course, being a filthy capitalist, I list my books and other services, for sale. I mean, now I have a 9-hour AIM investing course I'm offering people that tell you everything you ever wanted to know about AIM. But if you want the free version, just send for my book. Can I put a plug in for my book here?
Yeah, absolutely.
Okay. If you would like a free copy of my book and a couple sample newsletters, write Jeff at Jeff, Jeff, at jjjinvesting.biz, biz. That's to get a free book and newsletters and some other free AIM material, write to Jeff at JEFF at jjjinvesting.biz, and I'll be happy to send you a PDF version of my book and newsletters.
Nice. I guess, can you share a memorable story from your early investing days that had a significant impact on your method?
I have the greatest story in the world here. I grew up in Ramsey, New Jersey, a town of about 7,000 people in the northeast corner of New Jersey. A great town to grow up in. I loved it there. I had a great childhood. Well, through the center of our town ran the Erie-Lackawanna Railroad. It was the classic 4-track railroad. The outer 2 tracks were commuter trains to and from New York City. The inner 2 tracks were freight trains. I literally drove over those tracks every single day. Well, I read everything, and my dad would bring home the newspaper. I'm looking through the stock tables one day, and I see Erie-Lackawanna has a stock. Wow. And back then they used fractions. So I'm looking at the price, and it was 2 5/8 or $2.62. So I knew I had about $300 in my savings account from raking leaves, mowing grass, and shoveling snow. I'm 8 years old. I go to my dad. For some reason, I fascinated and loved trains. I don't know why. So I go to my dad and beg him. I said, because back then you really had to buy everything in 100-share lots. You didn't have computers, and you couldn't trade, easily back in those days. So I go to my dad. I go, hey, Dad, I'd like to buy 100 shares of Erie-Lackawanna for $262. Well, my dad said, absolutely not. All my dad could remember was how bad the Great Depression was in the 30s. And because of that, he never bought a share of stock in his life. And that cost our family dearly. I learned that lesson too, investing is the way to a much more prosperous future. Well, I nagged him, got nowhere. I gave up finally. Well, I go down to our basement Christmas morning in 1955, and my dad had bought me a model train set and set it up on our ping pong table. So I'm fascinated by this, right? Well, a little while later, I go to my Christmas stocking, and believe it or not, my dad had found some way to buy me 5 shares of Erie-Lackawanna stock at 2 5/8. How he did it, I never found out. Well, long story short, 6 months later, the Penn Central Railroad bought the Erie-Lackawanna and redeemed every share of Erie-Lackawanna stock for $16 a share. So I got a check in the mail for $80, which, was nice.
Yeah.
But then I'm thinking to myself, even at 8, I said, if my dad had let me buy 100 shares, I would have gotten a check for $1,600, which is all the money in the world to an 8-year-old in 1955.
For sure.
My dad did me the favor of literally branding in my brain that investing was the way to go for the future.
Right.
And so I dedicated my life ever after to finding the best possible way to invest, and I finally found it with AIM using leaps.
Nice. Now, you mentioned that your method's simple and easy and uses basic arithmetic. So how accessible is it for the average person without a financial background?
Absolutely essential. You don't need to know anything. I can help you, give you suggestions on a good stock to invest. I can help you set up your spreadsheet. So basically, like I was giving you that example, I started off, Mark Doherty with no knowledge of options and no knowledge of leaps. And within 6 months of my guidance and education, he was able to do it himself because it's very, very simple math. I've had many people hire me for 6 months, learn enough, and just do it on their own. Because I'm not going to be here forever. I'm 76, so I want to leave a legacy, and all you basically need is a pencil, and I even use paper spreadsheets. I don't even mess with formulas on Excel because I didn't grow up with that stuff.
Right.
So, and I do some little tricks, and I teach people all my little tricks, and a lot of them are in the books also.
Right.
And I tell people, I said, I said, you think it's hard to learn AIM? How hard do you think it is when you have to invent it, to begin with?
Yeah.
And I have learned all the tricks because I'm smart. I'll pat myself on the back. I'm smart, and I figured out all the little things that you needed to do to give yourself the best possible chance with AIM. Now, is AIM perfect? No, but it's as close to perfect as you're going to ever find out there for so many reasons. First, and how many methods of investing double as an emergency fund too? Because if you started with 500,000, and I have one investor who's got $1 million, he's working on it with $1 million, another one with 500,000, several smaller ones. And get this, I can help a lot of people who are smaller investors because I figured out a new way to do AIM that I call lean AIM. And it's even simpler than regular AIM. Here's how it would work. With regular AIM, you need basically to buy 15 contracts to have enough to trade. So, for example, in its glory days, if you had bought Tesla and tried to do regular AIM, you would have needed over $200,000 to be able to buy 15 contracts. So you're controlling 1,500 shares of the stock and to have 50% in cash. So you would have needed like 125,000 worth of leaps and 125,000 cash. That's 250,000. Not everybody has that. Well, I had my friend Claude. He liked Tesla. So I told him, I said, hey, Claude, you can buy one contract on Tesla for $5,000, control 100 shares. You buy that contract, we will immediately put in a limit sell 25% higher because options routinely will double or triple in a year. So 25% is a great average profit to get quickly. And I have a binder on my desk. Here, I'll show you. You'll get a kick out of this. Here is the cells from Lean AIM I have achieved in about 11 months.
Wow.
It's about 300 cells with profits of over $300,000 just on Lean AIM. And that's like 1,000 here, 1,500 there. Right. Over and over and over. On average, it takes 1 month to do it.
Wow.
So I can help people because I had a lot of people tell me, hey, I only have 10 or 20,000 to invest. Well, fine. We can do Lean AIM. The very first Lean AIM I ever did was an accident. Somebody was trying to buy 15 contracts at $200 a contract. They wound up buying one contract. And then for some reason, the rest of the sell didn't happen. So I said, let's go Lean AIM. So I convinced him to put in a limit sell 25% higher. So since he bought the option for 200, we put in a sell for 250. He got the sell the next day. And my buddy Claude on the Tesla took a little longer. He put it in for 5,000. Well, 25% higher than 5,000 is 6,500. He got that sell in a month. And the beauty of AIM is why you make so much profits with it. You bought it at 5,000. A month later, you're selling it for 6,500. Now you're rolling over 6,500 into the next buy. And then you sell that one, you're going to be rolling over 9,000 next time. Plus, I teach people in my course, and anybody who would like to learn about my AIM investing course, go to my website, jjjinvesting.com, and I have information on my course. Also, I have many YouTube videos available on my website for free that you can look at. So I go out of my way to try and get you lots of information on AIM. So if you're at all interested, go to my website and check out my course and check out my articles, check out my blog posts, and check out my YouTube videos, and you will learn anything and everything you need to know about AIM. And you'll at least learn enough to write down a question that you can ask me.
Nice.
Because I love to help and answer people. My whole purpose in life is to help other people. I've never done this to try and get rich for myself.
Nice.
Because, see, I'm one of the lucky ones. I got hired by the U.S. Army in 1983. You probably weren't even born. But
I was actually. I was in high school, but yes. Not as young as you think.
But that 1980, I got hired. I always remember I got hired the first day of spring in March 21st, 1983. Well, 1983 was the last year the U.S. government offered a defined benefit pension plan to new employees. They told me, Jeff, you come to work for us, we'll give you 2% times the number of years you work for us at your average highest 3-year salary. So I worked for them for 35 years. So 35 times 2 equals I get 70% of 100,000 a year. Plus, the nice thing with the pension bit was for those 35 years, I did not pay Social Security. I paid into my own pension fund. So every year, about 15, 20% of my pension is tax-free because it's a return of my own money.
Nice.
So I know how vital that is in my life. And I can't imagine how people my age without a pension can manage. So I always thought I wanted to find a way to invest that would replace the pension the average person is never going to see anymore. Because 401ks don't cut it. I'm sorry. You know, they just don't make you enough money to lead any kind of a good life. And
I agree.
I've convinced many people of that, and many people are doing AIM investing with me.
Nice.
And I want more to do it because it's by far the greatest way you'll ever see.
Right. I guess I'm looking at the future. How do you see your investing method adapting to changes in the market? And what advice do you give to listeners looking to maintain a long-term profitable investment strategy?
There's roughly 6,600 stocks that trade. There's only 500 that have leaps. Okay. What you'll find is there's always going to be new companies and new industries that suddenly go to the forefront. Right now, the big one is AI, artificial intelligence. So how I adapt by looking at the hot stocks of the present that have leaps. So to give you an idea, literally, NVIDIA stock shot up from 400 to 950 in a couple months. The leaps went crazy. I had one guy, get this, he bought one lean AIM NVIDIA leap for $22,000, 220 an option. Within literally 2 days, it went to 29,000. We sold it. So he now had 29,000 to invest in 2 days. That happened also with Microsoft. That's a perennial good one. There's a couple what I call Hall of Fame stocks you always want to have leaps on. Apple is one, Microsoft is one, AMD is one, whatever. And even stocks you would think are strange, you know, and would never make you a fortune that have nothing to do with technology have done well too. In the free book I give away, I wanted to show people, I thought back then, and this was, 30 years ago, that 5 years was a good test for AIM. You give it a fair test. Well, I couldn't find leap prices going back 5 years. I don't know if they exist even. So I found a wild and crazy stock called Crocs, C-R-O-X. It's a shoe company. Well, the first year, to give you an idea, Crocs went from $13 to $71 a share. Doing AIM, you started off with 10,000, 5,000 cash, 5,000 stock. In 1 year, Crocs went from 10,000 to 24,000, 140% gain. But you're still only up 14,000. You can't retire on that.
Mhm.
But wait, okay. The second year, Crocs did the reverse and proved the stock market is a huge roller coaster. Crocs went from 71 to $1. Think that would panic a lot of people?
Oh, yeah.
But us aimers, all I was trying to do is see, what would happen. So I kept trucking. Well, Crocs quickly recovered from that $1 and did not go out of business. At the end of 5 years, your 10,000 in Crocs had grown to 350,000.
Oh.
That sounds pretty good, but it gets better. Many, many years later, I said, you know what? I'm curious whatever happened with Crocs, from 10 years ago.
Mhm.
So I looked it up, and I'm a glutton for punishment. I dug out my paper. I wrote down the monthly prices for Crocs for another 10 years. And long story short, not once, but twice, your cash went negative 250,000 because I wasn't using my bear buy and super bear buy strategies. I just pretended I had deep pockets.
Right.
Well, both times the cash not only totally recovered, leapfrogged ahead. So long story short, at the end of 15 years, your Crocs had grown from 10,000 to 1,750,000. You had 900,000 in cash, 770,000 in shares of stock.
Wow.
So 50, and I love to tell people, I said, 15 years is and I did the same thing with advanced micro devices, a good, and that was only up from 10,000 to 450,000 in 15 years. I think I could live with that. So what I tell people is, I said, because of the brilliance of, you're rolling them over, and again, that was the stock because I couldn't get the leap prices. So
Right.
you didn't even have to roll them over, you just had to own them. And all I did to make that 1,750,000 was check the price arbitrarily once a month, just once a month. I didn't even bother doing the next buy and next sell at the bottom of the spreadsheet. I didn't have time. I'm a one-man band doing all this stuff. So, but to prove to me that if you're a little bit patient, and like you saw that example, the beauty of AIM is it'll make you profits long term, and it can make you profits short term. Once, and I give you an idea. I was begging people, and you guys send me your email. I'll send you some information you'll find amazing. But in March 2009 was the low point for the financial meltdown when Lehman Brothers went bankrupt, and get this, in a year and a half, the Dow Jones went from 13,000 in 2008 to 6,500 in 2009. Right now, the Dow Jones is 38,000. Think that's a bullish trend over the last 14 years. I do. And I dug up some of I still have them glued in my brain here. For example, American Express was $11 a share for the stock in March 2009. 10 years later, American Express was $91 a share for the stock. Boeing was $32 a share in March 2009. 10 years later, it was $360. Bank of America was $5 in 2009. 10 years later, it was $35. You see a trend there.
Yeah.
And when you look at that article, you see about 150 that did the same thing. So the stock market is a lot like a hurricane. Everything either gets wiped out or everything is rebuilt. It's basically the way to look at it. A lot of times, see, there's an old saying in the investing world, 2/3 of whatever affects the price of your stock has nothing to do with the company. It has to do with wars. It has to do with economics. It has to do with unemployment. All sorts of outside factors. You think if interest rates drop back to zero, you better get on board the Bull Express, because the stock market likes nothing better than low interest rates. So that's one reason why it's suffering. But the beauty of leaps is they move independently from the stock they follow, even, or the stock market in general. And so you will get quick ups and downs, and that's all you need to trigger a sell with AIM. You just needed to do it at that moment. And the beauty of AIM is because you're using limit buys and sells, and there's no extra charge from your broker for that. And think about this. If you bought 10 contracts, say on NVIDIA, you would be buying, I'm going to say, roughly 300,000 worth of leaps. You know how much it would cost you to buy 300,000 worth of NVIDIA leaps? It would cost you $6.50. You couldn't even get a Big Mac for that. So the one area where there's been great deflation is in the stock market. All stock trades are free now, and leaps only cost you 60 cents a contract. And believe me, the broker earns it because it's difficult. I've seen numerous instances where somebody's buying 10 contracts, and it took 3 or 4 market makers to make the order. One guy sold them 2, one guy sold them 3, one guy sold them 1, maybe the same price, maybe slightly different price, because there's just not as much high ownership. And my saying is always, I always love witty sayings. If you like the stock, you should love the leap, because the leap is totally married to the stock. It's just as safe as the stock. And this method has worked for the 18 years I've been doing it. So I don't think it's going to stop working. It's nothing has ever put a harpoon in it, as they say.
Nice.
And it's just by far the greatest way to invest. I've never seen anything even close to being better. And, look, give you an idea, the in-the-money portfolio that I use, checking the price arbitrarily once a month, has grown from 1.2 million to 26 million in 18 years. Not bad.
Not getting that at the bank.
And that's an average of about 115% a year overall. It's not always even. And I'll show you how AIM works very good. At one point, you remember the dot-com meltdown in 2001, 2, and 3?
Right.
Okay. Well, I just happened to pick a 10-year period to check AIM with stocks that overlapped completely the dot-com meltdown, which I didn't plan on, but it taught me a valuable lesson. At the end of 5 years, my stock portfolio was up 150% with AIM, which I thought was good, 30% a year. Well, along came the 6th year, and my portfolio went down 50% from 151 to 100%. The second year was also down 50%, and now it's down to 50%. The third year, it was down 51%. So now, the end of 8 years, I have a balance of minus 1%. Now, I guarantee you, I'm still doing a lot better than the rest of the investing world out there, who was jumping out of windows and things, But then the 9th year came along. What do you know? The bull market returned. In the 9th year, I made a gain of 281% on that portfolio. So I went from minus 1% to 280%. And then the 10th year was a regular bull market of about 25%. So long story short, in 10 years, I made a 325% profit, averaged 32% a year, despite 3 of the worst bear years you ever saw.
Wow. That's pretty incredible.
So you've got to have faith long-term in AIM, and then you will be rewarded, and unfortunately, life has become, everything only gets 15 minutes of fame. So you have to ignore that stupid saying and say, where am I going to be in 10, 15 years if I religiously stick with this? And I can ask Jeff for advice on how to conserve my money. I mean, I give you a good idea of how AIM can work. I had a guy buy JD. It's like the Chinese Amazon, online retail company for computers. Well, he bought 15 contracts originally at $14, which was a good price at the time. A couple years later, it got down to 58 cents. They do that sometimes. But he had gone from owning 15 contracts to owning 138 contracts. So it came time to roll over all of his holdings to the next year's leaps. Well, I told him, I said, you have so little money remaining, we can't roll over. There's no, I hadn't invented lean AIM back then. So I told him, I said, we need a miracle, but AIM can produce miracles. So I said, why don't you, you've got 138 contracts. Why don't you figure out a sell price and we'll try and sell all 138 of those contracts and get you some money back. So he did some work and he concluded, well, Jeff, he said, I figured out with 138 contracts, I break even at $3.50 despite my original buy at $14. Because all AIM is a sophisticated dollar cost averaging system, but you're doing buying and selling. So he put in a sell order for a limit sell order for 138 contracts at $3.50. I thought it was hopeless myself. I let myself down by not counting on AIM to do its job. He literally got to sell within a week, made a $28,000 profit on that trade alone, and got back to even, and we're off and running again. And that's why I probably still have him as a client today.
Nice.
So,
miracles happen.
It's just amazing what AIM can do. I remember one time in my book, you'll see, I came up with this one chapter called The Good, the Better, the Best. I looked at this one stock called Alice Chalmers, which was a tractor company, kind of like a John Deere type. Well, the stock started off at like $10.50. 3 years later, it was $3.50. It always went basically down. Well, at one point, it rallied. At one point, it was $3.50. Well, I compared the lump sum investor. I said, the guy who put all 10,000 into the stock, he's down 6,500 because it's worth 3,500 right now. But when I looked at AIM, because you had been doing some buying and selling, even though it was down to 35%, the AIMer was still at about 80%. And then at one point, it goes from $3.50 to $5. AIM went back to 95% of your original purchase price. So I call it the drowning man syndrome. I said, you might make a mistake every now and then and buy a bad one. But when you get one little spike up, you can sell it and almost break even. So the lump sum guy, the best he could have done was get back 50% of his money, if he sold it at $5. If I sold mine at $5, I'm getting back $9,500. And learned a lesson. So there's just so many advantages with AIM that it's hard to list them all in an hour.
Nice. Like anything we didn't cover, anything new and exciting going on that you want to tell people about?
Yeah, when you send for my book, you get the article on lean AIM, and you can learn lean AIM in 5 minutes. I kid you not, it's that easy. And I'd be willing to work with you with lean AIM because the hardest part is picking the best stocks and leaps on those stocks. And I can help you with that. And I have many, as you saw earlier, there's 350 sells on lean AIM just in the last year. And that's, about 95%. And they average in 1 month. So don't let the amount of money you have invest stop you from getting started. This is the biggest bang for your buck you'll ever get in the investing world. Nice. The established investing world really doesn't want you to know about leaps and AIM, and I want I view it as my job to get you the biggest bang for your buck, because most of what you're investing in right now will never achieve the goals you want to achieve unless you're a millionaire or multimillionaire already.
Right.
But I've helped many people get to the point. Like I'll just give you one. Sorry, my buddy Mark, the guy who made the 1.25 million. He had colon cancer, so he had a rough life. Well, by getting that money in 1 year, he used to vacation in Mexico. With that money, he was able to custom build his own cabin and move to Mexico and stop living in Portland, Oregon, which he didn't really like the weather or the expense or anything else. Another good story. I had one of my buddies, Mike Matusak. He was an AIM investor for years. All he ever bought was Apple and Microsoft. He loved those two. Well, at one point, he calls me up and says, Jeff, I have to stop investing. I go, why, Mike? You're doing very well. He said, well, I want to buy my parents a custom-built $600,000 home. So I'm going to sell all my investments and pay cash and get them a home. I said, that's great. Those are the kind of stories that keep me going. That I have truly helped somebody achieve a life goal that they never would have achieved without my help.
Yes. Very inspiring. But thank you again for being on the show. Again, that was Jeffrey Weber. So thanks for listening to Successful Minds with Patty B. Never miss an episode by subscribing to the channel. So thank you again.
Okay, I'll just leave you with one last. To get my book and other help, write to Jeff at jjjinvesting.biz.
Yeah, I'm going to include that on here also. Thank you very much for listening.
And thank you very much, Pat, for having me on your show. I really appreciate it.
You're most welcome. This is definitely an inspiring story.
You've got that email address. Send me your email, and I'll send you the book, my newsletter, and those articles, and you can start doing it yourself.
Sweet. Then we'll have to do a podcast talking about my success.
Yeah, then we can do one about you when you're a millionaire.
That would be nice.
Thanks again.
Okay. Thank you.
Thank you for listening to Successful Minds with your host, Patricia Barnowski-Schneider. Please leave your feedback and visit strategicadvisorboard.com to get the latest and greatest business advisement on the planet. Follow us on social media for updates, and we'll see you on the next episode.